How to become a millionaire, stock market investing, and exactly how much money does it take? So what I'm about to say, probably controversial, but the facts are the facts, and I don't know whether this continues into the future or not, but damn, it is fun to think about in the near term. So let's get into this by first of all talking about dividends. Now, I'm primarily a passive income investor, a huge proponent to dividend stocks, but it's hard to recognize the reality that dividends are dying. And what do I mean by dividends are dying? Well, this is probably the worst time in history to be buying any form of dividend stocks. In fact, the biggest proponent of the S&P 500 has stated since like the 90s that 70% of the total returns have technically come from dividends. But now that the dividend yield is historically as low as it was since back in the 90s, I just don't think focusing on dividends makes a whole lot of sense here. Because I mean, $1 million in the S&P at 1.28% does not seem that overwhelmingly attractive. In fact, I think the last time the dividend on the S&P was anywhere near attractive was literally the 1990s when you were getting like a 3 to 4% yield. Those days have come and gone, yet still in these days, people sit here and try to explain to me why I need to be like PPC Ian, Gen X dividend investor, and dividends, yet none of these people will ever show me the performance of their portfolio, because obviously I could name a few outliers for sure. I mean, there's a lot of outliers that outperform the market that pay dividends, and hell, I could even say Apple and Microsoft are a dividend stock, but I know sure as hell you don't give a crap because those yields are too low to even grab your attention. I mean, you want those 5-10% speculative yield traps, as they call them. But look at this. I mean, you could pick any company under the sun that I would say is one of the greatest companies of all time. Johnson & Johnson, underperforming the market. Pepsi, underperforming the market over the last 5 years. Coca-Cola, a proponent of Warren Buffett, definitely underperforming the market in the last 5 years. Even if you included the compounded rate of reinvesting the dividends, you ain't nowhere near close to the market doubling in the last 5 years. I mean, Clorox is one I've been recently buying. You got Procter & Gamble, and again, these are a few proponents. I mean, I could throw Costco or Walmart or some other things in here, and you'd be like, yeah, but look at these ones, Kyle. But those ones, again, I highly doubt you're looking at because you care about yield. You want highest yield possible. But today I'm going to show you why chasing yield isn't going to give you that much success right now, because the reality is the markets are high. Are they overvalued? Who the hell knows? I could say it's overvalued, but then you look at some earnings and we'll see what the quarter over quarter brings. But the reality of the fact is the best return you're ever going to get, ironically, is in the safest investment in the market. S&P 500, representing the 500 largest companies in the US. And when I look at this, and I explain this to people, it's kind of hard to believe. It's really hard to believe, because you can become a millionaire unbelievably fucking fast if the market keeps doing what it's doing. Check this out, okay, guys? Going back from September of 2020, well, we're in September of 2021, going back to 2011 of September, so literally over the last 10 years, the market is up 284%. I have been an individual stock picker for the last 7 years in the market. I have luckily outpaced these returns, but when I look at my several year return, I have literally been averaging about 29-30% when I average it out. And luckily it's been compounded in a shorter time period than the last decade. However, I had to work really bloody hard and go through a lot just to make, I think, a few extra percentage points over what the S&P is doing. It honestly boggles my mind at these numbers, and nobody appreciates it. Doesn't matter who I tell it to. You want me to tell you how much people don't appreciate the reality of this, but I'm about to make you appreciate it. If you take a look on Google Trends, what people are actually searching across the internet, whether it's dividends, growth stocks, the S&P 500, I'm sure you've seen it across the YouTube spectrum. I'm experiencing the pain myself of lack of viewers of content. There's just a lot less viewers than there have been literally in the last few years looking up this content across the broader internet. Yet now is by far the most fascinating time to actually be looking at this stuff, because let me show you what happens if the market keeps doing what it's doing and you want to become a millionaire and you get another 5 or 10 years out of this, because that's literally all it's going to take. And we go into a compound calculator here, folks, and you are starting from dead zero today. You got hustle, you got drive, you're out there grinding, right? And you're not nearly as worried about collecting a 4 or 5% yield on your measly $10,000 you're investing, like the vast majority of dividend investors out there that have no money really for retirement, have great stable jobs, yet focus and fixate so heavily on income that is severely underpacing the market. And again, show me your performance. All I ask, just show me your performance. We can have a nice discussion about how great you are picking your dividend stocks, but something tells me the vast majority of people don't know what the fuck they're doing. And this is a prime example of it, right? If I sat here and told you, could you come up with $2,000 a month for the next 10 years? And yeah, $2,000 a month, pretty substantial amount of money. However, over a 10-year period, at a lower than market average return, because I'm just calculating it at 25% here, you can see you'll be a millionaire in 10 years. That's crazy. That's crazy. $2,000 a month is not an absurd amount of money, especially if you're in a household, you got a wife, you both have full-time incomes. I mean, is it really that big of a deal to be making, you and your wife making over 100,000 a year in the household income, and you're putting 25,000 that aside and using 75,000 for expenditures and taxes? I mean, that does not sound unreasonable. I honestly think this has been by far the easiest market to make money in. Again, 10 years, the last 9 months, all-time highs over and over and over again. Again, this could change at any point in time. We do not know what the next 10 years looks like. And a lot of people sit here and try to explain to me how it's overvalued, how it's this, how it's that. This is not the dot-com bubble. No, this is not the 2008 financial crisis. These companies are proving earnings capabilities. And those earnings capabilities are coming from new innovation, seeds that were honestly planted in the dot-com bubble, realistically, as Kathy Wood likes to spout. And for as long as those seeds continue to have a compounded rate of growth, that is just mind-boggling. I mean, we're talking about companies making $100 billion in net revenue a year, and that's more money than, literally like combining like the bottom 20% of the entire market caps of the S&P 500 stocks. Like, these are astronomical amount of money that continue to compound into further rates of return, whether it's Apple doing share buybacks, whether these companies are reinvesting into AI, or whatever the hell's going on. This is some crazy ass time period to be in. And I'm kind of pointing this out to you to literally say this is by far the only opportunity I think you're going to have in your lifetime to have the most convenient way to get rich. And most people are going to sit on their hands. They're going to be telling their grandkids how they didn't do shit, and they watched the greatest exponential growth period in innovation since the Industrial Revolution go by them. But I'm hoping that if you're watching this, you're prevalently aware of this and you are taking advantage, because I can't get over sitting here looking at my portfolio hit all-time highs literally every week. It's ridiculous. And I pick individual stocks, and some of them severely underperform the market. Luckily, some don't. But now it's just like, what's the point of trying? I mean, this is an ongoing conversation, right? Of like, why are you chasing such high spec? Now, don't get me wrong. Small caps present the highest value, in my opinion, right now. I work with a lot of small cap companies with huge, crazy potential, and I think that could be a great proponent to any portfolio, because those things can double a lot quicker, in my opinion, than the S&P is going to again, perhaps. But still, even with all those research and small caps, I would make that a hobbyist part of your portfolio and keep it limited, maybe like 10-15%. I wouldn't go much higher than that, and maybe diversify some stocks. I've got tons that I'm still interested in, things like MindMed, lots of small caps I follow that I think are going to be huge. But again, the path of least resistance for your lazy ass is, instead of here trying to act like a smart aleck who thinks you can be the best stock picker in the world and outperform the Buffett, which, trust me, I've been grinding at, and I'm somebody that has been doing this, and it's kind of hard not to admit that why put all the effort in when you could just put the effort into going out and making more money? I mean, you could literally go out and just do Uber Eats, side hustle to walk the dogs, and get yourself closer to being a millionaire, and then sitting here and trying to be a genius stock picker. So this is how quick you can become a millionaire. Now, just imagine you're able to put more than $2,000 away a month. Like, I mean, you could really mess around with this. I mean, these numbers are crazy, right? So I want to pass this question off to you folks. What you think about this? What do you think about the dividend community right now? Because a lot of people that are new to investing are driving into these parts of the market that don't make sense to me, because they are highly likely to underperform. And I think it's leading people down the wrong direction, when clearly, like I said, we all sit here and continually look at these growth stocks, these massive S&P 500 companies, and just in utter awe of what's happening here. And I hope you are too. So stay cool, stay awesome. I look forward to catching you tomorrow.